Hi, Warriors. Kind of a quiet session in FX, but I want to feature the gold because I've been preaching patience about buying gold and the miners, and we're down 26 bucks right now in gold. I'm going to share a potential target that didn't look really probable um, maybe couple weeks ago, but I've had this line drawn for weeks now, where we tagged it down here, which shows that gold could break all the way back down towards 1900, 1880, which is 78.6 back, challenging the 50-day right here. Here's the 200-day. People probably try it here. It's still my contention that we try it down here, and this may be the last bus stop. It's going to be a very important level to me. Silver is holding up better as gold took out last week's lows. Silver is holding it right now. I still remain negative to silver too, although the ratio is really tough. It's pulling. It looked like we had a breakout, and now we're pulling back to the breakout. We'll see if this, let's call it 87, just to be sure, closes back under 87, will again make silver the preferred long, gold the preferred short. So that's a level to keep on. I don't want to be long either. I still think that there's lower levels for us to be able to buy the miners. I brought up Newmont last week before the sell-off and thought that we could pull back to the 46 level. Here it is. It's this line coming off the prior two lows at 36. That would not be a new low, but certain issues will make new lows. And I talked about a very important cycle coming up this year, not last year, that the miners would put in their lows in 2024 and really have a great 2025. Should have a decent second half of 2024 in my view too. But perhaps even BTG could make a new low by the time we're down to those levels I talked about in gold at 1900. That's still a pretty big break from here. And still my contention that we'll be able to buy the silver miners cheaper. Here's AG. Warned about the gap that said, I don't want to buy it. I don't feel compelled to buy it. Left a gap. It's only about 10 cents lower, but maybe we get $5 here in AG, maybe even a full-blown retest of the lows. And let's get to FX now. So when I was on the air did one Friday, I said you could be a seller between 110, 110.50. And I still believe that. If we take out Friday's high, that there's a short coming, maybe as high as 10.50. It's my contention the euro will take out these lows, or at least have full-blown retests before the euro's a buy. Best guess around 107. Maybe cable has a chance to blow through these highs and take out the stops, trade towards 29 while that's happening. And here's a chart of the dollar. So I think we had the first part of the correction that we peaked here on the NFP, and that we had A down and B up, and I think the dollar's a buy on any pullback back towards 101.5. That's about 80 pips from here, and that we will not peak until we take out the highs over 104.20. Wanted to talk about Aussie and give you a long-term view on Aussie. Yeah, maybe Aussie could rally one more time too, but here's my big picture on Aussie, which kind of ties in with the gold, that this is going to become a neckline in Aussie. And if I just zoom out a little bit, that we could still have a pullback towards 65, just enough to shake out the bulls here and develop some type of right shoulder here. Left shoulder left, got all the way down to, looks like 64.50. I don't know if we're going to go that low, but, maybe 65 is when I'm going to start accumulating Aussies. And then you have a nice measured move of about 5.5 above here is going to give you 74 cents. So that's a currency play I'm looking for. Also, I like the commodity currencies. So Canada, still think that we'll see at least 35 to 36. I think you could buy pullbacks if it comes off. There'll be a little bit of risk on here maybe for a few days. Here's Apple. It's going to come in, I believe, a buck higher, $1.30 higher. So we'll see if it fills this gap here. Still my contention that this is not the low. We'll take out the 180 level. There's huge open interest in the January 180 puts, which I own some. I didn't take them off. Looks like it'll be expiration poker for me. And we're due for some type of rally. We broke 10% from the highs, right? 200 to 180. So let's see what Apple could do. A lot of people are going to come in and get short Apple under 180. So, NASDAQ was due for a bounce. Maybe we're going to go to 16.6, correct this recent decline, but I still think that there's one more shoe to drop in risk, and that'll most likely happen when the dollar is headed back up towards that 104.70 level. But in the meantime, perhaps we correct this 800-point decline halfway back would be 16.6, but I'm looking for 15.6 minimum in the coming weeks. Yields, still believe 4.25 is possible on the 10-year. So here's a 10-year is about unchanged on the day. Maybe it pauses here, but the 4.25 level, I have a lot of confidence at. And I'd say that this is the most important chart going forward in the market, because if we go to 4.25 and fail and make new lows, then we have a different interest rate picture. But if we go to 4.25 and only pull back and then close over 4.25, those easings that are those Fed cuts that are priced into the market will go away in a hurry. I believe CPI, many CPIs across the globe, I think the US CPI number will be the decider on this. So still looking for minimum 4.25. Said last week, don't chase the bonds. Still believe that there was a pretty ugly close on Friday that thought we'd get at least 92. And you could do fib measurements that come in even lower, like at 90 or so. So that's my take on the market. The major point about being patient, about buying precious metals, has saved you some money as people have really been piling into this, especially after, the invasion. And then we had a nice recovery to 2080, but looks like we're going to set up one more decline, one more flush that will hold these October lows. And this would be completing a wave 2 down here, which means the money wave is ahead. So we get buys in at 1900, and you take 1.618 of this move from 1900 is going to give you like 2400, 2450. So that could be a big play. Best guess, February, early February, a week either side of that. So again, you've been patient for almost the whole month of December and everything. Now it still pays to be patient and do your work. And if you're interested in miners, start stalking them and see where gold is at when the gold dollar's around 104.70, which is something else. I said 104.80. Maybe it stretches to 105, but again, I think the dollar, which will support risk, is going to pull back to maybe 101.5 first. So I hope everyone has a good week. See you in the room. I have an excellent interview on Wednesday, Hugh Henry, which is, he's a legend. Hugh's been with us once before. He's been long Bitcoin, made a great call on its stock. I want to see where his head's at on the market. Also a bond bull, so we'll see if he thinks there's legs left in that. Mike will be with you in about 90 minutes, and I'll see you tomorrow with Mike at 11 a.m. EST. It's time for Mike and me. In the meantime, don't just count your pips, count your blessings, and I'll see you in the room. Adios.